Welcome back to a brand new advanced price action concepts video. In today's video, you're going to learn my exact edge. This is the edge that I've built over the last 5 years. This is by far the best way I've ever found to trade the markets. It's a day trading entry, but it's a swing trading approach, which means I'm able to capture the most profit out of the moves on a daily basis. Just a couple of things before we get started. A brand new Trading Missing Pieces content video is out right now. That is our advanced price action course. That is on narrative building. So if you're struggling to create a narrative and you're struggling to understand the direction within the markets, that is our step-by-step approach on how to build a narrative so you can understand direction and you can build a high probability trading idea that you can repeat over and over again. That's available for all the NJT members on the dashboard. Also, massive shout out to Zaki and Marcus inside NJT. These are our NJT members. They've just received amazing results for January, utilizing the concepts and utilizing the strategies that you can learn at Not Just a Trade. So well done to you guys. And those two guys have just been put into our top 20 traders inside NJT as well. And we're going to be working with those traders on one-to-one calls as well. So well done to you guys. And now let's get into today's video. Okay, so here it is. This is by far one of the best ways that I've ever found to trade. And the reason it's one of the best ways is because there's an actual logical reason behind why this is the best trading strategy and best trading system that I've ever found. So there's two things that we really need to understand. Sideways range, initiation, pull back into that range, mitigation, and a continuation. This is a bullish order flow pattern. If we was to flip this and see this as a bearish order flow pattern, it looks like this, right? We just invert the scale. It's exactly the same pattern. So if we're looking for sells, we're going to be looking for it in this direction. If we're looking for buys, then it's going to look like this. This is the first layer because this gives us intention within the market. It gives us direction within the market. Now, what is left behind after we see points of mitigation and continuation phases is market structure. So we get A to B swing points within the market. So a lot of traders, they'll look at only structure and they'll make their decisions based on a bullish trend or a bearish trend within the market. Now, every single one of these points here, these swing points, and every single one of these reaction points at the top are always from a previous sideways ranging market. So we have to look left on our charts, find the previous sideways range, apply this concept onto the previous sideways range, and that's it. We have direction. Because if we know that these are the phases of the market, a sideways range, an initiation phase, we get a pullback phase into the previous sideways range, and then the next phase is that continuation phase. This is the RIMC concept. So if we see this pattern here from a previous sideways range, and we're in a bullish trending structure, and we're taking our trades at these points of mitigation here from a previous sideways range when we're looking left on the charts, we are setting ourselves up for the next biggest phase of price, which is that initiation phase that's going to target a previous swing high or a previous swing low in the market. So my trades always follow this same process. I always look for a swing break of structure because that shows the intention, it shows the trend within the market, it shows me the direction within the market. And then I'm always looking for previous sideways ranges in the leg up. So I'm looking left on the charts. I'm looking at the A to B leg. I'm looking at price to pull back into this area where there's been a previous sideways range to the left. Now, of course, there is going to be multiple sideways ranges in this move up. This is actually how price moves higher and how price moves lower. When we're creating that move up, we're moving up, creating ranges, moving up, creating ranges. It looks a lot like this. So these sideways ranges are going to be left for the future. And what the future is this A to B leg here. When price starts to pull back, which is this pullback phase between this high point all the way back down into the previous sideways range, we're going to react from all of the ranges on the left. And then eventually one of those is going to create the next big move within the market. When we apply on our location concept and when we apply on our strategies, that's how we're able to find the perfect ranges and we're able to trade those intentions so that we don't have to guess each range. We're looking in very specific areas for specific ranges, but this is just to give you an understanding of direction and what I'm always looking for. So the keys are the RIMC concept, which is number one. Number two is understanding the market structure. That gives us direction and intention to play behind. And that intention direction is always shown by a break of structure, a swing break of structure, very important. And number three, This is where we're going to be applying our entry strategies that you can learn inside NJT at these points of mitigation to play those biggest moves in the market, which is always the continuation phases. So many traders have the puzzle and understanding of structure. They understand how to read market structure. But if you don't apply on the RAMC concept, you're not trading with any sort of intention of higher or lower prices and any sort of repeatable pattern. So this is why we're applying these layers on top of each other to read direction and give us a statistical edge within the market. So that's the theory done. Let's get into the charts and I can show you some examples. So first of all, we start with market structure, right? Let's think about swing points. This is a higher time frame swing high. This is a higher time frame swing low. We can see that price traded in between the swing high and the swing low here. This is also known as a sideways range. When we broke this high, we showed our intention for higher prices. So let's just draw this on. For me, when price hasn't broken a swing high or a swing low and we're trading inside the swing high and the swing low, you can do one of two things. You can look to trade the edges of a sideways range if they line up with your session, or you can wait for price to break structure here to the upside to show its intention, and then you can trade alongside that intention to the upside. Remember, we don't have to trade every single day. We just have to put ourselves in high probability trades. And if you're trading 4 sessions a week, you're going to have over 250 sessions this year in terms of opportunity. So you don't have to be involved every single session. We also don't have to be involved if the market isn't presenting us our perfect opportunities. So there it is, right? Price has broken structure here to the upside. Yes, you may have had to wait a few days for price to show its intention first, but now price is setting up, right? So we've broken structure here to the upside. We can see price has seen continuation of higher prices. We run above this high, we didn't extend. We run above that high again, we didn't extend. That shows that price is slowing down. And then we pull back here to the downside. So now we know that this is our swing high point within the market. Up here, this is the highest point. And if we just zoom out and go back, all we're doing is looking for the lowest point before price broke out. So that is our swing low to our swing high here. So this is the stage that we'll currently be at in the markets, right? If we think about premium and discount, we obviously want to be buying low and selling high. And price is trading at higher prices right now. We're also starting to see something within price, right? When we break this low here and we don't extend to the downside and we don't break through and see continuation, price is again showing that it's starting to slow down, which if we've got our structure here to the upside, our A to B structure, which is showing us intention for higher prices, we've broken our swing structure again, which is our layer for high probability trading. We're starting to see price slow down because we're not extending through that low. Now we can start to look for our sideways range. Remember, when we're looking for our sideways ranges, we're always looking on the left-hand side. We're always looking within this A to B leg. Sometimes we're going to have to use our time frames. So anywhere underneath this area here, we're going to be looking for our sideways ranges. Obviously on this time frame, we can see there are many sideways ranges here within this move. These are all tradable if price was to come back into these areas here in the future and we was to see our setups during our session during that time. But let's just zoom in, right? We're on the 15-minute chart right now. Let's zoom into the 1-minute chart because sometimes we're going to have to use our time frames to find the sideways range. Now here we can see price is contained here between this high point and this previous candle low before we broke out to the upside. That is a representation on a seconds time frame of price being contained inside a sideways ranging market before we see an aggressive breakout here to the upside, which is our second phase of price initiation. So we know that when price is starting to pull back into this location in the future, it doesn't matter how price pulls back. When we get here during our session time and we see our entry set up, this is where we're going to be looking for that next big trend continuation move, which is where we can make the most profit in the market. This is why I always look for swing structure breaks and I always play RAMC at points of mitigation for the next big phase of price. So let's just draw this area on the charts now. And let's just zoom this across as well. Again, some people look for liquidity to be taken. I don't really care about liquidity being taken for me. All I'm looking for is continuation of the trend. That's going to happen in so many different ways. But seeing price running below lows and not extending typically is going to show you price slowing down, which again, that happening before the entry is showing that price wants to change its direction. So now we just play this forward, right? We've got our A to B, we've got our range that we could play. We've also got ranges down here as well, which we could also mark on ahead of time because we have our direction for higher prices. So let's just play this forward here again to the upside. And now we're seeing price moving into the session, right? This is London session. So this is not the session that I trade. I always trade New York session, which is the second half of the day. But again, in London session, I know Chucks took this as a continuation here to the downside. Again, we have a break of structure showing the intention for lower prices. We're running above highs and we're not extending, which showing price is slowing down. And we see the aggression and speed to the downside. So he's playing continuation of that momentum, which is his strategy for London session. We then see price continue down into this previous point of mitigation here at 10 a.m. Price starts to slow down here. We can see that if we're reading the price action, we're running below the lows here and we're not extending, right? This is showing a slowdown within price and shows price is starting to move sideways. And then because price is already set up before my session here, I'm looking to just enter at market open, which would be here, with a 10 pip stop loss, playing this as a continuation to the upside. Now, what's most important about this trade is that if this is the continuation of sideways range, initiation that creates the high, pull back into that range, if this is the continuation phase of the trend and the RIMC concept, the next phase of price is going to be the continuation, and the next target is always going to be the previous swing high. I don't target swing highs and swing lows. I target certain movements within price because during my session, price normally moves around 30 to 40 pips. So I want to put the statistical odds of hit and take profit in my favor. I don't care about making the most profit. I care about stacking wins over time, and that's what creates a profitable result, not always looking for those home runs. And then because I'm playing with that higher time frame intention, the reason it's a higher time frame intention is because we got a higher time frame swing structure break. This is more likely to play out in my favor, right? So this is a massive edge within my system. Make sure you save this setup. It is a really good setup. And then of course you can learn the entry strategies inside NJT as well. You can also learn exactly how we read the sideways ranges and how we read the structure in our advanced price action course. But if we just go back, right, and we just look at all the times the price has broken the swing structure here, we move back into a sideways range. Here we get that point of mitigation, and then we see continuation and price targets this high here to the upside. Right, this is just happening on a continued basis. Even this sideways range, if we just extend it across, we can mitigate out the same sideways range multiple times. We had multiple opportunities to get involved in this trade here to the upside as long as it lined up with our session. And again, the same thing happens here. So as I always say in my videos, it's about identification on the left, and then it's about entering during the session with our entry setups on the right-hand side of the chart. So now let's just play this forward again. Obviously, we got the session during London. What has price done, right? We've run above a previous swing high here. Now, if we look to the left where price is right now, price is reacting from a previous sideways ranging market. We know it's a sideways ranging market because price is moving slowly before we aggressively broke out to the downside. If you watched our previous YouTube video, you know the identification of all of these areas here on the charts because we just went through all of them, right? These are all sideways ranges in an A to B leg. This A to B leg also caused the swing structure break, which means when price runs back up into these areas in the future, we can get opportunities to play sells, right? Because it fits our rules. We've got an A to B structure. We have a sideways range here in that A to B structure. We're reacting from that sideways range in the future. If this lines up with our session, then we can play that intention here to the downside. So that's our setup within the market. Let's just draw that on now. And now the only thing that I'm waiting for at this point is to see my session line up, right? So we can already see my setups in play in the market as well. You guys that are trading the 15-minute chart, you already know what the setup is, that fractal setup. Now we're just waiting for the session to open so that I can play that bearish intention here to the downside. So session opens here. And all I'm doing, as I always do, is execute with a 10 pip stop loss. And I'm looking to play that direction within the market because the direction and the setup is already in play. So here we see very close to getting stopped out, of course. But we're using raw spread accounts, which means we are very likely to stay in on these moves. So even though you might look at this, and of course some of you are going to be trading on accounts where the spreads are large, my spreads on Euro USD are either 0 to 0.1. So 0.4 means that we're still staying in the trade. And then we see this eventually play out here to the downside. Now the most important thing is I'm using the same repeatable process for both entry setups. One's a trend continuation, one's a previous trend that has caused the swing structure break, and I'm seeing my setup line up with that same intention, so I can play that exact same trade to the downside. So these are my setups that I'm always looking for. I'm always looking for trend continuations. I'm always looking for the swing structure break. I'm always looking to play previous sideways ranges. And then I'm looking for my entry to line up with my session. That is literally my strategy. Go and backtest this for yourself and be patient when there's no opportunities to play, and make sure you're patient when there's no setups to play in that direction. Thank you all for watching. If you want to find out more about the advanced price action course or our mentorship, you can do at notjustatrade.com. Follow the links in the description. Make sure you leave us a like and a comment on the video if you did enjoy the video, and we'll catch you guys on the next one.